Hey, hey. I need snow, Mike. Let me do the disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of and reciprocal. My trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I'm out of Shopify. I'm out of Roku. We'll look to get back in them on dips. I bought that Lucid today, which was an idea from the morning meeting, which we could take a look at later. And I shorted some TQQQ in the afternoon, and then it rolled over a little bit. The ski jump. I'm trying to build a ski jump in the backyard. My wife's not too happy about it, but I need more snow. It kind of has really slowed down on the snow as soon as I got out here. Unfortunately, I need more snow to come in the backyard. The snow that's out there is getting a little heavy and a little sunken down at this point. I got like the starting point of the jump built in. It's probably like 15 feet high that I built out, and then the next part of my plan, next time it snows, is to build the jump part, which I'm going to try to do over a fence I have in the backyard, and then I got to build out a landing. So there's a lot more work to be done, but I'm being stalled by the fact that we haven't gotten a good snowstorm here in a couple of weeks. Yeah. For now, I've only sledded off of it, off the top, which honestly is way scarier than being on skis. No control. It was like a 5-year-old jumping on this sled and bashing my lip on the top part of it. I had to walk in the house and hope that wifey didn't notice that I had a little bit of a fat lip. Oh, ridiculous. But yeah, hopefully we get some snow. We could really use another storm out here. Even though the mountains were still a lot of fun this weekend. Anyway, let's jump into our afternoon meeting. So, nice update today. SPY up 1.1% or so. Qs continuing the mean reversion that we called for, up over 2% on the day. And the IWM up 1.2%. Intraday here, you can just see the uptrend. We got to this key 400, broke above it, and then pulled back into the afternoon here a little bit and battled this 400, but managed to close above it. Let's take a look at the daily chart. We'll take a quick look at the SPYs. I really want to take a look at what I've been talking about, the difference between the Qs and the IWM and how that's been resolving. I'd say we've had a number of really good kind of macro calls for this market so far. Anyway, market given some good continuation from Friday today. I didn't expect this degree of continuation today. I thought that it would be more of a consolidation day, leaning a little bit to the upside. Like maybe we'd get to 397 or 398 with a little upside grinding bullishness. I didn't expect that we would clear 400 today. I did not expect that we would make our way as high as 402.64. But technically it's a day two, so I guess I shouldn't be that surprised about it. It's just there's a lot of resistance at this 400. Like a lot of resistance at this 400. Not only is it a level, it's kind of the midpoint, but was also a level from the November-December consolidation. But it's really kind of where this macro downtrend line, and I'm not a huge connect the dot person. I think everyone knows that. I look at trend lines. I'm a much more stickler on my actual trading definitions of what a trend is, a pattern of lower highs and lower lows for a downtrend, a pattern of higher highs and higher lows for an uptrend, and then you can have competing trends on different time frames, and generally whatever the largest time frame is that you're looking at is going to be the strongest. And our large picture here is very clearly we've been in a downtrend for just over a year, starting with our all-time highs. That was January 4th, 2022. And you can just see a series of big picture lower highs and lower lows. And the first pretty good call out I think we've had recently was back in the end of December when we talked about how maybe, just maybe, this base here, if this base can break up. And that breaking up of that base was a lot of hard work, by the way. It really took this jobs number on January 6th for us to be able to do it. But maybe if this base here can break to the upside, that you're looking at a higher low, a big picture higher low. Now that doesn't make an uptrend. One higher low or one higher high is not an uptrend. You need a pattern of higher highs and higher lows. You need more than one. But what I thought was that maybe this could be a lower high where instead of just continuing this big picture downtrend, we actually create a wedge. And again, what is a wedge? A wedge is a pattern of lower highs and higher lows. And if anybody needs me to, I'm just assuming that everyone already understands how the supply and demand implications of trend and wedges and things like that actually work. If anybody needs me to give more clarity on the actual supply and demand implications behind it, I can. But for now, I'm just going to assume everybody knows that unless someone needs more clarity. So instead of just having this big picture lower highs and lower lows, maybe we're able to get lower highs and higher lows, right? It's not a downtrend, it's not an uptrend, it's a wedge. Now technically wedges should continue in the direction of the big picture trend more times than not. And again, that big picture trend is down. So, but at the same time as there's a chance, as building up that big picture wedge is technically a bearish pattern, it's more bullish than just downside continuation. It means that bulls are trying to take a stand with these higher lows, that supply and demand, like the increased buyers that are driving it up, but the sellers that are still there creating the downtrend, they kind of come to a head, and then you get a break in one direction or the other. And again, more times than not, that break should be, in this case, down in the direction of trend, but there is a probability that it breaks to the upside because bulls are trying to take a little bit of a stand. And the most recent pivot high of that wedge is really this 400 from just, like a few trading sessions ago. Maybe you could argue I'm being too myopic with this as being kind of the pivot, but we held that trend line resistance there, which is where you would expect it to hold down. Obviously, 410 here is much bigger. Zahora is asking if I can cover the topic of a wedge one more time. Yeah, sure. So an uptrend is a pattern of higher highs and higher lows. A downtrend is a pattern of lower highs and lower lows. A wedge is a tightening pattern. So it's going to be a pattern of lower highs. So that represents the fact that sellers are continuing to step down in price, but also higher lows, meaning that the buyers are also becoming more aggressive in buying up that stock. And you can see here that we've actually had like 1, 2, 3, maybe 4 or so higher lows since the absolute low that the market created in October, while big picture still having lower highs. So that creates that wedge. The market kind of, like, the term I use is that it like kind of comes to a head here where it just tightens and tightens and tightens, and then eventually in one direction or the other it has to break. So you've got buyers stepping up, you have demand stepping up, you've got sellers stepping down. So eventually somebody's going to have to kind of win that battle. It's going to have to break in one direction or the other. And you do sometimes get false breaks in one direction or the other. They kind of break higher and shake everybody out, and then the real move is lower or the opposite. Really, wedges and those types of patterns are continuation patterns. So we should all remember that in technical analysis there are only two types of patterns. There are reversal patterns and continuation patterns. Technically, wedges are supposed to be continuation patterns. What does that mean? Continuation patterns continue the trend, reversal patterns reverse the trend. So technically, if you have this battle that begins to take place, who should win this battle is the trend. And that goes back to our kind of age-old rule that you should assume that any trend that you're looking at is going to continue until it's absolutely proven to you that it's broken. So really, again, this wedge, even though it does represent the bulls taking a little bit of a stand here for the first time, because up until now it's just been lower highs and lower lows, big picture for a year, really this wedge actually should break to the downside because that's the direction of the bigger picture trend. But maybe it won't, and as a matter of fact, it's attempting to break to the upside. And that's why this SPY 400 close, I think, is so important. We barely closed above it. I don't want to get too excited for bulls just yet. We barely closed above it. But really, you start getting a SPY close above 400, you're breaking the big picture downtrend. You're above the 200 day. The 200 day is still declining. And remember, when we're looking at these bigger picture moving averages, like a daily chart 20, 50, or 200 simple moving average, what's more important is the slope of the moving average, not if the market's trading above or below it. When you have a downward sloping 200 day, it does mean that big picture rallies should fail. But that'll continue to happen. Big picture rallies will continue to fail until they won't. Because eventually, someday, whether it's beginning to happen right now or it takes another year for that to happen, eventually someday the market will get above and hold above the 200 day in such a way where that 200 day flattens out, and then eventually it comes back up. But for the most part, when you got a declining 200 day and you're getting above it, you should actually assume that rally is going to fail. And again, every once in a while, like what happened over here. We got above it, we failed. We got above it, we failed. We got above it, we failed. Maybe, fourth try here is actually the charm, or maybe it's not, where we actually get above it and hold above it. And I think that part of that comes into play if we're able to really start clearing above this SPY 400, which again, technically we had to close above it. But if you start having some consistent closes above 200, if you start having this downward trend line really be able to break, if you start showing me a daily chart of higher highs and higher lows, which we're not quite there yet, for me to really have, the real confirmation for me, like getting above 400 is a fantastic start and might be enough to give us the juice to actually give me the confirmation that I want. For me, the real confirmation will actually be a close above SPY 410. Because then I know I've got a higher high here, and I've got a higher low. I said that wrong. I have a higher low here from the December low, and then I have a higher high because I was able to break the major pivot that happened on the upside in December when we had the CPI and the Fed day come out. So that's where my real confirmation will come in that the big picture downtrend is gone, is if we're actually able to get a close above 410, but your trend line of the big picture is breaking with a close above 400. Could be another fake out because the 200 day is still declining, but we're also above that 200 day. And I think the more time we spend up there, the more bullish this market can actually potentially become. I would go back to, for the VTF members, recommend that you take a look at Pat's morning note. Again, I mentioned it this morning, if you didn't look at it already, and just look at the Goldman Sachs tactical flow of funds update from the weekend. I thought there was some really interesting kind of data in there that could help give this market that next leg higher. So anyway, that's the SPYs, which I said I wanted to talk less about. I said I wanted to talk more about the Qs and the IWM. So let's take a look at the Qs and the IWM. So again, last week, another great big picture call. Our technical price correction, for sure, into the equilibrium area where this IWM gave a pivot low and is working its way back up. And the Qs also gave their pivot low in order to work its way back up. One of the things that I had noted, and I like, one way you can pay attention to relative strength and relative weakness is just, you just compare the charts, right? You just see where they're trading versus one another. And one of the things that I've been doing very consistently recently as an analysis tool is we know that we had this, big picture sideways action for almost an entire month. That was like the second half of November and the first half of December. You can see it in the SPYs, and you had support at 390, you had resistance at 410. 400 was like this middle point, which also really kind of acted as resistance. You can see it with the Qs. You had support at 280, resistance at like 295 or so. You can see with the IWM, you had support at 180. You had resistance at like, 188 to 190 kind of area on the upside. And what we really saw off this breakout of the potential higher low of the big picture wedge pattern when we broke out on January 6th, which was such a key day, by the way. And not to go too off topic, but these are the key days that can really make traders a lot of money. I just want to recognize that. Like these very key pivotal days, they don't happen that often. And when they do, if you execute properly on that day, and then you hold positions because you get a good close and you keep positions overnight, anybody here can easily have a whole bunch of longs still from the January 6th breakout that you're just continuing to get paid on, you know, whatever this is, a week or two later as this market is approaching highs. And maybe in a good scenario for someone who's still long from that day, we now get the break of the big picture downtrend in the S&P that I was just talking about, and that's where you make big money. The big money comes from big moves, and especially so if you can have big moves on big size. Anyway, not to get off topic. So the IWM really is what led higher starting on January 6th. And this was the one, the extension here into this resistance, it was just getting really silly. And that's why we were calling last week on Wednesday and Thursday for price and time correction to come in. We got a day of time correction, then we got bigger price correction. This is where we needed the pivot to occur. We got our pivot. But the other thing that I was really looking for was mean reversion in this pullback and into this bounce. You can see by doing a simple comparison, the IWM had gotten up to the resistance zone of the consolidation. The SPYs had gotten back to that 400 midpoint, which was also resistance for the SPYs. And the Qs had gotten just back to, on this initial bounce back, had basically just gotten back to or just above what was the support of that consolidation. So IWM, you know, basically got to QQQ equivalent of 295. SPYs got to like QQQ equivalent of, I don't know, 280, 750. And the Qs really only were able to just get a bit above that 280. So in this pullback and in this bounce, I wanted to see, and this was in conjunction with the thought process just on seeing that the Fed Fund futures, which is honestly what I care more about than what the Fed actually says, though we need to do also pay attention to what the Fed actually says, that the Fed Fund futures, the terminal rate there, had actually continued to decrease. Helped me think that we could get some further mean reversion, Qs catching up to the fact that the IWM was such a big outperformer, and that's exactly what we got. So coming into this day on the 19th, and this was a really tough day because we didn't get the perfect pivot. You want that perfect, nice downside tail. I remember like midday we were at highs. I thought I was going to get it, and then we rolled over into the close, and it made for like a very not perfect daily candle as far as a pivot goes. But this was the first day here where I think there was weakness off the open, but the opening lows held on a lot of the tech and growth stocks we were looking at for that day. I remember just as an example being in Roku. That's this day, where Roku and a lot of other of these growthy tech stocks were able to hold their opening low. Whereas I feel like the market, this is what the market did. The market was not able to hold its opening low at all and continued to deteriorate. That was the first signal of what has become 3 days now of tech and growth real outperformance. And now you can, by doing a similar comparison, right? We just did a comparison of the three indices kind of versus where they were November, December. We'll now just do a simple comparison on our last pivot high. Our last pivot high on January 18th. Where's the outperformance? Qs are clearly making a higher high. The IWM hasn't been able to get above it yet. Qs are well above it. IWM is not. And the SPYs are, like what seems to happen often, somewhere in the middle. Like they ticked above today, but didn't give like a real convincing close above kind of that pivot high. But we've certainly seen a lot of mean reversion from these Q names. We've started to see some short squeezes kind of coming into effect. And all this really leads into today's trading session when we're trying to create this big picture game plan of what we should be doing for today. And my thought process is definitely leaning to the optimistic bull side of the market. I thought we could see some continuation. I didn't expect we'd have as big of a move intraday as we did, but I was really looking for those growth names to see if they could go. So my entire list today from the morning meeting was almost entirely growth stocks. I didn't really love the FANG names too much, even though Apple gave fantastic continuation. Apple barely held. Did Apple even try to stop at 140? 140 should have been resisted. We barely tried to stop at 140. One little extension shooting star, price correction in the ADMA, continuation in Apple. Apple didn't even hardly took a pause at 140, which I thought was going to be resistance. I was actually calling for. I didn't like it as much today because the market wasn't as extended. But I was actually calling for an Apple short on January 18th if it was able to get up there. It didn't quite get up there. Today I don't like it as much. But Apple, massive leader. Some of these others took a break. Amazon, I thought, was actually really disappointing today. I didn't want to buy any of the FANG names because I thought we should have them from Thursday, Friday last week. So I'm just looking for continuation at this point. Apple, honestly, well exceeded my expectations of continuation, whereas Amazon, I was surprised, couldn't participate at all. Surprised that, you know, you got the Qs. It's interesting, if you guys remember, Amazon was like the strongest FANG name here for this brief period of time after this kind of false breakdown that happened on January 6th, and then it just took off like a rocket ship. And Google couldn't participate. Like, Google really struggled to participate. We were looking at this 92 resistance, 90 support. 90 support was a great trade. And then Google just took off like a rocket ship and caught up. And now Google's actually trading, you know, they're similar price at this point. Amazon was trading at $98 when Google was still trading at like 90, and now I've got Google here at 100, and I've got Amazon at 97. So now it's kind of interesting how that happened. So I was disappointed by the lack of follow through with Amazon, though I didn't want to be involved in it. Google, though, was too extended for a new ad today, but gave great follow through. And I was worried about Google being able to give follow through because there was more ChatGPT chatter from Microsoft, which helped make Microsoft strong. And someone mentioned Microsoft this morning. We said it could get up to 245. Got exactly 245, so that's pretty good. But I didn't like buying any of the FANG names today. The semis, as massive as they were, we did talk about a potential scalp through 72.50 in AMD today as a trade. I didn't really want to chase these either, to be honest. Though AMD was a fantastic mover. This Nvidia is just too extended. Micron is just too extended. What did AMAT do? AMAT got downgraded today, and it broke out. If AMAT didn't have the downgrade, I would have put that 110 on my list, but it didn't. But anyway, what I was really looking for today was to see if growth names could continue, if these short squeezes could continue. And that thought process especially came from Wayfair. Wayfair gapping up massive. How much did this thing close up on the day? Wayfair's up 26.5% on the day. Got 3 upgrades this morning. Had a phenomenal day on Friday. Someone said this morning that, I think it was Elliot, that has a 40% short float, which is just massive. And what can happen with some of these names, when they start to run, they can really all start to run. Because if you're a fund and you're like entirely focused on the short side of the market with these growth names, you probably had a pretty good year plus at this point. But if you're starting to get squeezed out of Wayfair because it's gapping up 25%, there's a good chance you have to cover something else also at the same time. So we had Wayfair gapping up really big. We had Shopify gapping above $40, which has been big resistance of a long consolidation that we've spoken about. So I wanted to see if some of these other names could go. I was looking at Nikola. It ended up being a pretty big disappointment. Nikola had news this morning. I thought they could squeeze it. It's got, I think, a 30% short float. I thought this thing could go to 4 today if it really wanted to. Disappointing. But Lucid was a solid winner. Talked about buying Lucid through 8 off the open versus 782 versus yesterday's high to see if that can give continuation. Really nice trade. I'm swinging a little bit of it. Tesla even was able to go today. Tesla at 144. This is like kind of in the zone of our second target. It was like this area up to 150. So really good bounce back on Tesla. Tesla's starting to get a little scary on I guess technically Tesla could bounce back to 170 if it really wanted to on like a really big bounce with market support. But I would not. If you're not, we had plenty of opportunities that we had communicated to get involved in this Tesla down here on the long side. I would not be buying Tesla at these prices anymore. The move's just getting kind of hectic. Stock was at $100. Now it's at 144. So yeah, anyway, just some pretty good trades today, I guess, as far as our thought process for the market in conjunction with what names we're looking at, see if we get some squeezes in these growth names, and for the most part they did it. So I hope everybody had a fantastic day. I know the icing on the cake for me was this sumo that I've been just trading back and forth forever, getting this buyout speculation kind of coming into play, leading to this big 29% move now off of that. We'll see what happens. This thing, I'll be very disappointed if this thing gets bought out at a price less than 13. And I think it should be more. I think it should be 16. But I'll be very disappointed if it gets bought out at under 13. So I'm trying to be pretty aggressive with this, but this was definitely the icing on the cake. It's been one of my heavier positions. So anyway, that's all I got. Happy to take a look at what you guys are looking at or questions that you guys have. Spies were nice because they were on the major level. Yeah. See how that continues. From Rex. Could you talk a little about what made you... Oh, yeah, and I'm short the market. Can you talk a little bit about what made you short the market at 11.20 when there is not a lot of volume on the extension, and how you would determine the stock is strong enough to go long... If the stock is strong enough to go long to a stock when it is extended. I don't fully understand the last part of what you said. And how you would determine the stock is strong enough to go long to a stock when it is extended on the 15-minute chart. I don't fully understand that part of the sentence, but I can definitely talk about why I shorted today. And I see you have a follow-up question about NVIDIA, so we'll start with it. So yeah, I'm short. So anybody who says I don't short, I do short. Though I was looking at my statistics for 2022 and everything, obviously, because we're in a new year. I'm a very cautious short seller, and in turn though, I actually have like a very, very high hit rate on my shorts, but I'm very cautious about shorting because I have experienced pretty much all of the worst losses of my entire career have been in the short side. So I'm cautious on it, but because I'm cautious, I tend to have a pretty good hit rate. The thought process on this was really pretty simple. I wanted to begin to build in when the Qs got $10 extended from the ADMA on the daily chart. The concern I had is that I didn't have that same degree of extension in the IWM or the SPYs that would, obviously be a positive added factor for the Qs. Because it's like, this is the one thing I was worried about with the Q short. I'm still worried about the Q short because I'm keeping it overnight. So I guess let me start by answering why I shorted, and then I could talk about why I'm still a little bit nervous about it. It's pretty simple. Whenever we've seen the SPYs and the Qs get more than $10 away from the ADMA on the daily chart, it really struggles to be able to continue and typically pulls back. It's been very consistent for the last year plus. Sometimes it does get as much as like $15 of extension. That's few and far between. It's easier to be that extended on the downside than it is to be that extended on the upside. I would also mention that. But the Qs, which I've been calling for outperformance from the Qs and mean reversion, here I am shorting them. It's really this simple. QQQ ADMA now after the close is up to 280. High of the day today is 290.21. We got $10 extended from the daily chart in the Qs. I've also got longs on, so I don't like to hedge, like that term hedging. I just haven't been successful with it in my career. I usually lose money. So, but what I do is I take tactical trades sometimes in recognition that they are also acting as a hedge. And the plan with the Qs was not max buying power or anything like that. The plan was to continue to build into it on the way up if it continued and actually got even more extended. And again, the concern I have is that I don't have confirmation from the SPYs. SPY ADMA is at 394.50 and it traded as high as 402.60. So we got whatever $8 extent. Like I wasn't there with the SPYs to get the confirmation off of that. But I wanted to start building into the Qs. I've got plenty of longs on. It's been a pretty big move. It's been good P&L for me. So I figured let me start building in. And really I'm just looking for a move to $21 on the TQQQ / the ADMA. If the ADMA gets above 21, which it's only at 1990 right now for this TQQQ, then I'll pull back on the aggressiveness, which isn't even that aggressive, on my TQQQ short. So that was it. It wasn't anything in particular. It wasn't anything particular necessarily on the small time frame, though I was looking at the extension on the daily chart in conjunction with the extension on the 5-minute chart at 11:20. You shouldn't be able to be like this extended on a 5-minute chart from the equilibrium area at this time of the day. And again, this is really where our 15-minute comes into play. And you can see how extended the 15 was at this time of the day. It's just super extended. It's like, all right, I got an extended daily chart, I got an extended 15-minute chart, I got an extended 5-minute chart. It's 11:20. Like, the best case scenario for higher, honestly, is sideways. And that's pretty much what happened for most of the afternoon, is that we went sideways. Kind of digested that upside. And yeah, and I was light enough here with the game plan to be able to add more on the way up, which I can also do more easily because I got enough longs on. Or even if I'm bleeding out a little bit, and I had a great initial price in my TQQQ, but even if I'm bleeding out a little bit on my TQQQ, the longs are going to be going up. So again, I don't want to consider it a hedge because it's not a successful thought process for me. I'm better off thinking of it as a trade, but I can keep in mind that I can let the Qs bleed a little bit, because eventually they're going to have to get back to equilibrium on the daily chart. So that's the whole thought process. How do you determine to go short on extension, or if it extends up, turns into a time correction, go long? You don't know necessarily. So part of it depends on the game plan that you're implementing. One thing, and this is not what I did, it's what I prefer for traders to do though. And the only reason it's not what I did, again, is because of all the long positions I have on, is if you're trying to pick a top, the opposite's going to be true if you're trying to pick a bottom. If you're trying to pick a top, you don't sell on the way up. You sell on the way down, even if you're trying to pick that top. Like, you wait for a signal on the small time frame, and there wasn't really one here. Maybe this candle, maybe because of the extension, but it's not a great candle. What did the SPY candle look like at that time? Was it better? Yeah, SPY candle's a little bit better. Shooting star here, extension on a 5-minute chart, 11:20. So you do have a little bit of signal there for that. And the IWM's okay too. Let's just look at the SPY for a second. But you think about the time of day, because we know time of day is important. Extension on a 5-minute chart, because we understand how extension works on multiple time frames. And then you get a little bit of a signal here. And if you can combine that with the daily chart extension, because again, trading is, and you know this pretty well, Rex, because you always frame your questions around layers of probability, and I love how you do that. Trading is really dynamic, right? So you need to be thinking not just what does the SPY look like on a 5-minute chart in a vacuum, but what do these indices look like on this 5-minute chart versus the time of the day versus where the daily chart is, and that's what potentially makes this a better trade. And then you could just see this and go, okay, based on all those factors, I'm going to short versus this high. It's very small risk. If I get pushed out, who cares? It's small risk. But if this thing rolls over and I can get a 15-minute correction, if you come in and shorted on the SPYs, I don't know, 401.70 and took on 40 cents worth of risk at this time of the day, but you got like a full 15-minute correction, you could be looking at a move to 3.99. I mean, look, it went to 3.99 pretty easily. You could be looking at a move to 3.99. That all of a sudden is a pretty good risk reward for a counter trend trade, and then maybe you roll over a little bit further because of the other factors that we kind of just chatted. Plus SPY 400, it could be a false breakout through 400. There's a lot of things to like about recognizing this small signal and taking the small risk. A lot of things to like. And again, if you get shaken out of it, who cares? The risk reward, when you're risking this little, there's a high probability of getting shaken out. But the flip side of risking that little means you can have a lot more stock and make a lot more on a rollover, should it actually occur. And in this case, you wouldn't have made a lot. You would have got your risk covered. Maybe you would have covered a little bit more into the ADMA on the 15 because it turned into more of a time correction. Then new highs come in and you get stopped out. But that doesn't matter, right? The result doesn't matter. The process is what matters. So that's how I would really prefer to take that trade. And again, I wasn't doing it that way. Like, I saw this coming in, and seeing this happen on the 5-minute chart was actually the signal to me, knowing what the daily chart looks like. Oh, you should start building into a short. Why don't you whack some here? And I did. But I wasn't using this high as a stop loss for the reasons I just explained. I'm trading it a little bit more based on the daily chart, where I'm willing to build in a little bit more to allow the daily chart to become even a little bit more extended, in which case I'll actually become even heavier on it, because as I get heavier in the short, because the market's continuing to go up, I'm actually still making money because I'm 1,000% net long when I'm entering that trade. So I hope that helps. Let me read your follow-up question on the video. I also looked into NVIDIA this morning. It had a breakout chart above the 118 high, 178.73. Okay. I thought it could push higher even with the daily extension, and it's day 2. Would daily extension be less important when we have a breakaway gap? Yes, in theory. How do you weigh which factor is more important than the others when it comes to probabilities such as extension, relative strength, relative weakness? So the question here, at least the second question, is when you're looking at, and this is a common question that I get that I still don't have a great answer for, is basically what you're asking me is when you're looking at layers of probability on trades, what weighs more importance to you? Extension, like this is really extended, that's against it. But what about the relative strength? It's really relatively strong, that's for it. What about the fact that there's a potential breakaway gap? That's also for it. What do you weigh more? I don't have a good answer for that question when I receive it, because I think it very much depends on the specific circumstance of the trade that you're looking at, on which layers of probability are going to be more important. Also understanding the type of stock that you're trading, like NVIDIA, AMD, and so I didn't really like either of them for longs too much today. AMD got upgraded. This was my preference, and the AMD upgrade obviously helped NVIDIA. We mentioned in the morning meeting that you could try AMD, and I said for a scalp. I wasn't looking for a real trade on it. Through 7250, 7250 is a breakout. It got upgraded, and this type of stock. And this answers part of your question, and this is why it depends on the circumstance. This type of stock, AMD, can become like an extended stock that becomes more extended, meaning it can have like a higher percentage of extension away from the ADMA on like a percentage basis. This can do this much more easily than, I don't know, Coca-Cola can, or even the market can, because of the type of name that it is. The beta of the stock, and in this case the fact that it had news and it had an upgrade. So I knew that this thing could potentially really run if it breaks 7250, and it did. I just, and Rex is partially also is about the type of trader that you are. The type of trader that I am, I don't love, and I used to do a lot more of it, I don't love these heavy momentum, like the stock is already extended, but I think it can become even more extended type of trades. It's not where I personally have my success, which is interesting because I do feel like I have my most amount of success in continuation trades, like continuing that trend, things like that, but not necessarily like momentum continuation. I struggle with that a little bit more. So, you want to understand what type of trader you are, and then again, which factor is most important, I think depends on the specifics of the circumstance where you find yourself. So, hope that helps. Fantastic questions, a lot of nuance. And by the way, I would just say this to everyone that's listening. This is where we make our progress as a team, right? Like anyone who's new on the team, if you watch the training program classes that I do, which I highly encourage everyone to do that, especially if you're new on the team, they're like all like teaching trades or I don't know what the word is I'm looking for. They're basically teaching trades or concepts. That's the word I'm looking for. They're teaching trades or concepts or structure that is kind of like a perfect world environment. Like these are things that you should look for. These are how certain types of trades work. These are trades that I like. But when you actually get into it, like with Rex's question, it's never as simple as the training program classes like make it sound. The idea behind those training program classes is to give you like a foundation. And then we want to build on that foundation in these morning and afternoon meetings, because in fact, the market and trading is much more dynamic than can be explained on like a blackboard, teaching what a breakout looks like. And that's why, again, Rex, your questions are so good, and your thought process is always so good, because you're always thinking about that. Like, well, listen to the video here. Like, I like the trade, but, you know, like, what should I be doing? The thing is really extended, but it's also relatively strong. Like, how do I, you know, satisfy all those thought processes to come together into an actual trade? So, good stuff. Next from Paul. Can you go over my poor trade management? Sure. I bought CLFT. Is it CLFT? CLFT. That was one from the morning meeting today, right? Is it CLFT? Oh, CFLT. CFLT. All good. I bought CFLT at the open through 22 versus the low of the day. I remember, I don't know this stock. It got upgraded this morning, I believe. So I put 22 on the list because it looked like a little bit of a breakout. But I remember looking at it at one point, and it was after the first bar, and just thinking that the volume wasn't big enough, so I decided not to be involved. But it looks like you bought it. What time did you buy in the first candle, or did you buy the second time? Like, it gapped above 22. Did you buy after it put it in its low of the day? That's what I think I'm reading here, is that you bought after the low of the day. The first candle was tailing up. Okay. But this wasn't going, it wasn't going like the market. There was no real volume coming with the upgrade, which that was for me the key layer of probability, to go back to what Rex is saying, for me to not be involved in it. I didn't like at the bigger volume that I would have wanted to see was coming in. The 955 candle made you nervous. Okay, so you have a pretty good hold here so far versus lows. If you're long from 22, and I'm not sure if that's your price, it's a lot of risk for a $22 stock. You're risking 38 cents. I don't love that, but fine. Okay. And again, it's upgraded, so you have more reward potential because it's in play than, you know, like the average true range or whatever might signal for this thing. So anyway, 955 comes around. You got nervous. It was showing relative weakness. I stopped myself out at 10 a.m. for break even when it wicked up to 2022. Okay. 2220 and failed again. Should I have just taken some off to de-risk given the relative weakness and lack of volume, or is it as simple as buy a ticket, take the ride? So, I don't want to give a simple answer to this question. I'm tempted to give a very simple answer, but I don't want to give a simple answer. I want to talk about why it's important. I actually think it's slightly less important what you did in this circumstance. What's more important is that whatever you chose to do in this circumstance is something that you choose to do in every circumstance. Because the key to consistent profitability in trading is to approach the market in a consistent manner. And then the key to approaching the market in a consistent manner is to have rules that can allow you to approach the market in a consistent manner. And I don't even care what what anybody's strategies are, because there's many strategies in trading. They don't have to be my strategies that can lead to success. But the key is that whatever you're choosing to do in this circumstance is going to be what you will choose to do in every circumstance that is similar to this circumstance. So for me, with a recognition that consistency is the most important thing, that individual trade results are actually less important. I'll tell you, there have been times, I remember right before I drove out to Idaho, I was talking to Josh about this in the office. There have been times where I have done things with my positions that I felt so confident were the wrong thing to do, like buying a stock and thinking that it was actually going to go down, but buying the stock anyway, even thinking that I was going to go down because my rules dictated that I'm supposed to buy it. That's consistency. And that's why the rules are in place. And maybe here's this one-off circumstance where, you know, I'm not going to buy this stock. I think the stock is going to go down, but I'm actually going to literally buy it anyway, because as soon as I stop following through with what my rules say to do because of one individual circumstance where I think I'm smarter than my rules, I no longer have rules and I no longer have consistency. So I would rather buy a stock when I think it's going to go down because my rules say that I'm supposed to, and actually make less money or lose money because I'm doing it. I would rather do that then on that individual day or individual trade, make a little bit more money because I was smarter than my rules. So that's going to be the first thing that I want to say about this. It is whatever you did in this circumstance, you just need to make sure that that's going to be what you do consistently. Now, to add on to that, though, for me, it's buy the ticket, take the ride. I don't care. I put the risk on. I was giving it this amount of dollars. I was giving it to this spot. The risk is already there. All I think that you're doing when you liquidate a position at break even or for a small profit or a small loss or whatever, when you already took on all the risk, is you are putting yourself in a situation where with this trade, if it just failed right away, you would have taken the entire loss. You got in at 22. If you just took the high and it immediately went down and you got stopped out, you're taking the entire loss on the position. You already took that risk. Now you've been sitting in it for 30 minutes or whatever. The risk has already been taken. You might as well, thank you, Cold Smoke. You might as well be there to let the reward actually play out. Otherwise, if the trade didn't meet your criteria to begin with, you shouldn't have been in it. But if it did meet your criteria to begin with, even if this one doesn't work, it's going to pay you in the long run. So don't think that you're smarter than your rules. Is basically what I'm coming kind of back to. You got into the trade for a specific reason where you thought you could make money on it. I don't care what the result is going to be. Stick with that trade because this one fails, the next one works. The next one's somewhere in the middle of that. You need to just be consistent with the approach or you'll never be in there for winners. So thanks for the question, Paul, and thanks for throwing out there a time where you felt like you did not do a good job so that everyone can learn from it. From Zachary, do you watch precious metals to help with swing trades? I've seen COMEX maybe getting in some trouble for manipulating silver prices. Wanted to know if it turns out to be true, how you might look to play off of it. Sure, so I haven't read that news. I can say that in general, things like what you're describing here is the type of information that I might look to build a thesis around. I think that silver should go down because I'm just making this up because I know nothing about what this new piece of news is. Because the COMEX has been manipulating prices and the regulations are going to change and less margin and I don't know. I'm making stuff up where I think that's going to create an overhang on silver going forward, and I would rather be short than long. That's the stuff that you create a thesis out of, and then you trade the trade. You trade the actual setup that comes from the stock, or in this case, the ETF or commodity or whatever. So, of course, I pay attention to news on anything I'm involved in, and I pay attention to anything that's going to affect what I'm involved in. So if I was trading the gold miners, which we've been looking at a lot, if I'm trading the gold miners, you better believe I'm looking at GLD to get a representation of what the price of gold is doing. You better believe even though silver might not affect the gold miner as much, sometimes there's some crossover, I'm paying attention to what silver is doing. I'm also paying attention to what the dollar is doing because I know that the price of the dollar is going to affect how these commodities move and therefore affect the success of the gold miner trade that I'm in. So it goes back to the market being really dynamic and you have to pay attention to all this stuff at the same time. So I hope that helps. Cool. Was there anything on YouTube? I'm not seeing any questions popping up on YouTube today. So I guess we'll wrap it up. Oh, wait, there's one from Dave. We got one from Dave. I got short today, but I used some options to hedge it by selling a put today that would either convert me back to flat for a profit or increased cost basis since it's a short. Okay, you sold a put. I'm still short, but the put expired worthless before the market closed today. Before the market closed today, I sold another put that expires tomorrow to further increase cost basis or get flat for a win. What do you think of the strategy? Yeah, so what do I think of the strategy? I don't think I have enough experience trading options to give you a very educated answer to that. I'd be more curious to hear what Pat would have to say in regards to your response. My understanding of the strategy, and I understand your strategy, is going to be a little bit more theoretical because I don't trade options, and I think from that theoretical perspective, I think it's fine. You know, it's accomplishing what you want to do from the trade given the circumstance that you're in. So again, I know it's like a very kind of wide, high level answer, and maybe you're looking for more. But again, I don't want to overly comment in areas where I'm not as knowledgeable, which would be that. And yeah, Bill here is another person who could probably give you a little bit better feedback than I can on the option side of the trade there. Cool. All right. On that note, and I appreciate Bill's commentary for Dave. That's what makes the community great. You guys can continue to chat about it. I am going to end the meeting. So I hope everybody had a great day today. We'll see how we gap tomorrow. Tomorrow's potentially day 3, so could be a little nervous if we're up too much. And have a great night. See you then.